Hello everyone, today I'm going to show you what an A plus setup looks like for me. I will give an example using two trades that I took personally, and one on the 21st of July 2026 and the second is today, which is the 29th of July 2026. An A plus setup for me is mainly focused on two time frames, which is the M15 and the M1. Sometimes I do look at the hourly time frame, but the hourly time frame um, doesn't really add to my intraday perspective, if you know what I mean. So on the M15 time frame, I look at structure, my trading range, and POI. And then on the 1 minute time frame, this is where I look for entry criteria, which is I've got 5 checklists for entry within a key time window, which is the first 2 hours of London session and the first 2 hours of New York session. A typical A plus setup for me is a price that's moving, let's say, in a downward trend, and then price starts to pull back. We see a bit of hesitation, which is a market range. This mostly forms during the Asian session, and then London Open. We want to see the manipulation of the Asian range into our preferred POI, and then once price entered our preferred POI within the first 2 hours of London session or the first 2 hours of New York session, and then I go to the M1 time frame and observe if I can spot my 5 checklist confirmation, and then I potentially sell. So if you understand what I'm saying, an Asian range, I'm gonna put this in red for more understanding. POI, green, N3 confirmation within a time window. That is basically an A plus L for me. Time in price. So anyways, let me give you a typical example using the chart with the trade that I personally took. So as you can see, this is the price action before London Open. This is basically the New York, the Asian range. As you can see, this is around close to 6 a.m. give or take. And a London session starts around 7 a.m. As you can see, this is a bearish trend. So I've got two zones in this scenario, not the typical one I just explained on the board, not the typical one I just explained right now. We've got two zones, the decisional and the extreme. Price, for what I know, price can react off any of this level. So my job as a trader is to be reactive and not predictive. So I've got the zones, and whatever price comes to my zone within my time window, I'm going to look for entry opportunities. So I'll move this forward by 15 minutes. It's nothing much. I'm going to stay push it. As you can see, it is not yet London session. London opens around 7 a.m. and Bank 7 a.m. price just walked into my zone. So what I do right away is I just go to the M1 time frame and observe. So my 5 entry criteria are very simple. So I'm gonna just jot them down. One, market structure shift. Sweep. As you can see, these are my non-negotiables when it comes to M1 entry. Firstly, I want to see a market structure, M1 market structure shift, which means a very vivid break before price starts to pull back into my zone. So this is going back to where the structure starts to pull back, and then bang, this is the break. That is the M1 market structure shift, and then the Asian sweep is already there. This is the Asian range. This sort of yellow box has already been swept, and then the next is SOM, which is the session open manipulation. You can already see that right here, and DV means divergence. So I used euro dollar divergence, the EU GU divergence is one of the important things for me. As a mantra I use, no divergence, no confidence. It has really get me out of a lot of losses, and I'm really grateful for it. And the last one is the change in state of delivery, which means after the divergence, I start to see reaction, price breaking highs or lows that further the price ever breaking highs or lows that supports my buyers. Unfortunately, I cannot show you divergence right now because I'm using uh because I'm using FX Replay tool. As you can see, there's no break, there's no vivid break in it right now. There's no solid break that I could trade. I'm just observing the charts. As you can see, there's a lot of manipulations within this zone. There's a lot of manipulations, and these 5 rules helps me and keep me away from all these little tiny shenanigans you see all around. So right now, I think there might be something for me. Let me quickly check. So right now, I think there might be something for me. We had a break, and then a beautiful pullback, and then another break. That's fantastic. Very interesting to see. So right now, I'm gonna go in, enter right here, stretch it out a bit, and now I play out. As you can see, another structure has formed. So a structure is forming within my time window. I follow the chart. And there's a very important key thing that you observe. There's a market gap here, so I'm going to cater for that. I catered for the market gap. So the mark stop loss I use is around 80 pips, 8 pips, targeting 40 pips, if you know what I mean. So everything is already in place. And then let's watch the market, yeah? As you can see, price stopped me in, almost took me out, but then, it is what it is. I got in. This is too slow. Yep, yep. That was it for me. So as you can see, I was in and out before New York Open. So this is how I trade. This is an A plus. This is an A plus sell for me. I hope you understand. And the reason why, the reason why I'm a bit grumpy. This is around 1 a.m. So you can imagine, I just woke up from sleep and I thought that I should record this and share exactly how I trade. Some people might pick from it, and maybe they've been struggling with the M1 time frame. They don't know how to structure it. If you're always in losses, you don't know how to go about the lower time frames. This is the guide that I use that have helped me throughout the years to be a profitable trader. Now, this was today's price action, quite similar to the previous one, but it is unique in its own way. The same setup, price is bearish. The trend is bearish. So we've got this extreme, and then we've got this very tricky internal POI. The reason why this is valid, even though it is within the Asian range, it is because price has already swept this low. Plus, you can see it also had a little absorption at the top. So price came and then took out whatever was there. So which makes it valid. Price took out the Asian low and then the Asian high, and then this is a pretty solid supply zone in my opinion. So the structure already in place, and then this is my POI. So the M1 does it all for me, because this is what breaks will make you as a intraday trader. As you can see, this is my 5 checklist. It's always on my chart for guidance. It's always there. Alright, so this is when price came into my zone. The first thing is the M1 market structure shift. This is the M1 market structure shift. The Asian sweep, we had the Asian sweep below and then the Asian sweep above. The open session manipulation, this break is the open session manipulation because right, price was already trending downwards, and after the session opens, price change direction. That is a session open manipulation. And then next is divergence. This is my trading view, so I can show you how divergence looks like. Alright, so I have this very interesting indicator. So I'll use that to show you what divergence is. So when price is in my zone, I look at the highest point or the lowest point. It's the highest swing or the lowest swing. In this case, this is the highest swing around 8:35 a.m. So this was the high on GU, and then it was forming a high on GU and then a lower high on EU, because right here is EU. So this is a lower high and this is a higher high. That is a divergence already. Since divergence out of the way, I look for a change in state of delivery. This was the break. A change in state of delivery is just basically change of direction, change of movement, change of momentum. And yeah, that was a change in state of delivery. The reason why my entries here are not on the extreme is very simple. As you can see, there's a market gap here. I always cater for market gap, because when there's a market gap, price is most likely to come back to that market gap. So that's where I put my entry, and then I, in for 5 pips, give here a little bit of breathing space because of spread. And if I didn't, I would have been taken out. So ideally, I was supposed to use the extreme. Because of the market gap, price could have easily, as you can see, respected the market gap. Price could have just melted down from here, for all I know. But thank God, with my experience, I know to always give breathing room for stops. And that's how I entered this trade. I was able to capitalize on this. 5 pips target in 25, 1 to 5 hour always. And then yeah, that's how I managed to catch this. That's how I got to catch this trade. As price hit my TP, it reversed to me. So I hope you've learned a lot from this. I don't know. I know it's a bit overwhelming. It's been a long. I dropped a charts video and then I'm coming with this. Just take your time to digest it. If you want this type of videos, please let me know in the comment below. Until next time.